Right. So this is this week, some of the things I did, okay? Not the best of trades, okay? But see here, just putting some of the things together. See here, if I change to a line chart, you have a sharp V, okay? A strong support, and opposite it, you have this engulfing, right? We have this a base, all right? So I know that this base is a reversal zone, okay? So I mark the zone. So the best thing is to wait for price to hit the zone, okay, and then you sell. But see what happened on a 1 minute. Okay. Now, you see, the funny thing is that we have seen QMC, okay, confirmation like a boss, right? And we think that maybe it is the ultimate. All of them work like that. Internet is messing things up for me. Okay, so this time, you see the channel. Okay. So first of all, price broke out of this channel. Remember, we've marked this particular zone as a reversal zone because there's a strong support there. Okay, price broke up out of this zone. So we draw, you see, we have a low, a high, a lower low, a higher high. Quasimodo, opposite, you have a rally, base rally. This is a good entry. Your take profit is here. You get out. Okay. Now, when you got out, what happened? We have a strong change to a line chart. We have a strong support. Opposite it, we have what? A base. Okay. So this is a rally base rally. This is SNLC one. Price comes back, hit in, boom, this is your take profit. You get out. Okay. Now, this SNLC one that you saw here is not just SNLC one. Look at it again. It's club. We have a low, a high, a lower low, a higher high. This is what? A Quasimodo. So it means that if you go to another, a higher time, a time frame higher than this, we're going to see that engulfing pattern there. You see it now? Where was I? Okay, this is too high. Where is it? Here. Okay. I don't have access to all this. Okay. Okay. So you see that you have some kind of engulfing here. Okay, some kind of engulfing. It's aligned with the trend line. Okay. So you see in this particular case, the Quasimodo is also aligned with the trend line, but on top of the engulfing, it's not bad, right? So when you change to 1 minute, that is where you got what? You got the SNLC one. Okay. So at the end of the day, you see that you can find one pattern in another pattern. So within an SNLC one on a higher type, you can even find a Quasimodo there. Okay. So it's up for you to be able to read the difference between all the patterns and how to use them. And it will take time, by bit, as you practice, you start seeing them. Okay. So now, if you enter this particular trade from the SNLC one or using the Quasimodo level, it is the same entry. Using the Quasimodo level, this is the entry. Using the the strong support and resistance SNLC one, that will be your entry, same entry. You could have used another Quasimodo here. You have a high, a low, a higher high. Price retest the level. Okay. Take your profit here. It is small time frame. You don't hold trade for a long time. Okay. And then price came back. Since we haven't reached here, it came back into this particular base. I don't know what it is. I don't know what it is. I think it will be something like higher time frame, but this base, boom, it went here. So this is where I missed the trade. Okay, for here, I mark this particular level because it's in line with the Quasimodo. Okay, and then price broke out of the trend line. And in supply and demand, usually when price breaks out, okay, and there's what? A base here, it uses the base. So I entered this trade here. I entered somewhere here. Okay, came down and I got stopped out. And at the end, at that moment, I lost interest and I was waiting for it to reach here. And then boom, news came down, and then boom, where did it trade to? Look at the daily chart. Remember the 50% wick entry. Remember the 50% wick entry. Just that, you see, I hadn't analyzed the markets. Okay, 50% wick entry. We said so much about the 50% wick entry. Regarding the candle, we said the candle with the 50% entry should have high volume. You see, the candle has the highest volume in this particular area. Okay, we said again, we should have a long break. We should have a high volume. What did we say again? The 50% wick entry. Okay, so if it has a high volume, okay, you measure 50% of it. Oh. Okay, you measure 50% of it. Let me put a line here. Okay, so price came back into that imbalance, 50% wick with high volume. That's where price traded into. Okay, very close to it. Okay, so that is where we got a rejection. The rejection came around the 50% wick, and then boom, came back here. Right now, here, what do we have? What do you have? Go to the 1 hour chart. You see that we have a QM. So if you understand all the principles, you have so many trades. Okay, high, low, higher high, lower low, price trading unit, and boom. I didn't enter here. I didn't take this trade, but where did I enter? Okay, I entered on the 5-minute chart, SNRC 2. Okay, so as I'm telling you, don't rush. Don't rush. When you hit your zone, if the zone is a higher time frame zone, don't rush it. Don't even think about it. Okay, wait for it to. Okay, so now when it hit the level, you have a strong support. So you can see you have a strong support. Okay, price goes within that strong support and then break. So you have a first break, a second break. So this is SNRC2, right? This is SNRC2, and boom, your first take profit is here. Allow the rest to run and see how it runs. See how it runs. Okay, even breaking this low, we are still within that 50%. That wick hasn't been broken, and that wick now has become liquidity. So we have to break it. Okay, now what again? What happened today? Okay, on the 1 hour chart, there was SNLC1. What? Okay, on the 1 hour chart, there was SNLC1. It didn't manifest properly, but it wasn't bad. Okay, it wasn't bad. If you just know how to take your profit, you don't have a problem. Okay, SNLC1, you have a strong support. Okay, opposite the strong support, what do you have? A base. Okay, price tap into the base. This is not small money. This is a lot of money. If you entered somewhere around this level or even here, okay, the number of pips you would have made. 66 pips, not small. Okay, right. And still price is struggling to beat this particular high. Okay, went a bit above it. You are still within that strong support and you can still be picking trade. I think I've got a short trade today here, somewhere here. Okay, Quasimodo, right? We have a high, a low, a higher high, a lower low. So Quasimodo is here. Okay, opposite the Quasimodo, we have a hidden base. So if I go to a lower time frame, you're going to see a base there, which price traded into. So correct base, opposite. You get these are short trade, but guys, they are good. They are so good. So 144 pips if you were taking it below this particular low. Right? So every time opportunities are created, look at this 2-hour chart, BTC. I forgot to take this particular trade. Right, I send a setup. Right. So this is a 2-hour chart, 2-hour chart. Okay, so you have a 2-hour chart here, right? We have a strong resistance. Opposite, we have a base. See, price came in, boom, 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 and then back. Now, you see that if I draw this trend line here, okay, this has given me an engulfing. If I draw this trend line here, there's no way price will come here without breaking the trend line. It means that price is not coming here. Okay, so now the next place of entry I could be looking for, if you are following this trend line, is this strong support SNLC1 here and the trend line, but price came in early, got up. So if you reach here and it's in line with the trend line, I'll take it again. But what am I looking at? Look here, strong support, opposite if you have a base. So this base can stop price. So if I'm buying, I have to be careful of it. Okay, here what do you have? I have a high, a low, a higher high, and a lower low. I have a Quasimodo here. That is how things work. It is hidden Quasimodo. So you have a high, low, higher high, lower low. Okay, right? But this one will stop price. Okay, then what again? This is BTC, gold, USD. Testimony, I think you are the one who called that. You call that SNLC1. You see the way it worked. Okay.
Perfectly.
Yes. For this SNLC1. Okay. You call this SNLC1 here, right? And see, strong support, drop, base drop, opposite it, price comes, hit it. Today I took a trade here. It didn't go well. Okay. It didn't go well because I didn't take my profit early. I told you, we take the profits early, right? I had a trading range. Okay, this is my trading range, this high and this low. Okay, this is the Quasimodo level, right? Here, within the Quasimodo level, we had what? A base. Okay, so price is still within range. It doesn't support anything, but I wouldn't hold a trade on weekend. Okay, so for instance, here you have this drop, base drop, opposite price comes in, hit it. This is 35 pips, I guess. Okay, so if I had closed this trade, I would have made 35 pips, 41 pips, right? I think for my entry it was 35. Okay, so the things, they work. We just need to what? Work on it bit by bit. Okay, just don't try to hold the trade. If you hold the trade, it means that you've gotten the setup on a higher time frame, like CAT CHF. Okay, like CAT CHF like this. I think, where did I get a setup from? Weekly chart, I think. Okay, CAT CHF here like this. Okay, strong resistance, opposite you have a base. Okay, price comes in. Then when price is inside a base, now you start looking at it on a lower time frame because you can't trade on the weekly. Pick the trade on the weekly. So what do? You start looking for entries on the lower time frame. Okay, so this is where we are. Okay, let me mark it on the weekly first. I think at this point, I have to bring this one, and I hope those who joined us from other group, you enjoy the session. Okay. If you want to rewatch this particular session, I will upload it. I don't think I will put it on YouTube. Okay. So you see that within that area, within this area, now I think here you'll find a QMC. I think something like that. Okay. Okay, let me see daily if I have an engulfing. No engulfing on the daily. Engulfing on the daily. Okay. 4 hour. So what I did was this. I just drew a trend line. Okay. To pass here. Okay. Yes, I think on my MT5, 12 hour, you get an engulfing here. See that we have traded above all this on 12 hour. Okay, so I just looking for Quasimodo. This is a low, a high, a lower low, a higher high. So this is my QM. Okay, opposite my QM, you have this other block or supply candle here. Price comes in and then boom, goes up. Okay, I think Victor drew this trading range. Okay, and then let's say if you continue this, right, and then we can look for this area like this. Okay. So let's see if it comes down, but we have broken structure. Even today, I was in this trade. I was in this trade for a short while. So all the pairs I've opened are the pairs I'm looking at weekly. It's not as if this week, it's not as if I trade so much volume. Okay. They are the pairs that I was looking at. Yesterday, even Joe wanted to enter, but we didn't get a chance to enter. So today I got to take a look at it on the smaller time frame. I think let's check 5 minutes. 1 minute, there was an entry here. Okay, there was an entry somewhere there on 1 minute. So if you know it, you get a lot of trade. You get a lot of trade. A lot. Okay, as easy. Okay, we have a QM with an engulfing. You have an engulfing, a QM opposite it. Very beautiful. Boom. Okay. Why? Not because it is an area you are expecting a reversal. Okay, so those short trades, you get them. Those short trade, you get them. Okay, so at this point, I'll pause and then allow for questions.
Like second touch on the SNR or the trend line is necessary for the Quasimodo before like going to the lower time frame.
Yes, it is necessary. You see, if the trend line, the Quasimodo can be traded without a trend line, okay? But if you're trading it with a trend line, that is another strategy on its own. So we've already looked at the Quasimodo reversal, its strategy, like us picking the trade without even looking for further confirmation. The trend line is just an additional confirmation, okay? So it's not compulsory for you to put a trend line there. So for instance, when what we do is that we do this, okay? We know that we have a trend, a trend to the downside. Okay. The first thing we said is that, okay, since we are using trading range, you can use the trading range to find entries. Okay. And for my definition of trading range, it's not this high and this not the impulse move, but what the correction. Okay. This high and this low will be my trading range. Okay. So if price has to come in to trade, I can look for setup within it. Okay. So within this, I can find some moves. Okay. Okay. Like this. Okay. So if this is the case, then in my trading range, I have a Quasimodo. Okay. If I'm lucky, okay, my Quasimodo will be aligned with the trend line. Like this. Okay. So for instance, it will be aligned with the trend line and then everything will be there. Or it will be slightly above it, and the wick will enter and come and close below. So I will teach you guys how to confirm entry before you take. If it's a higher time frame, you have to wait for rejection. So you have to look at how you wait for rejection. The next session, we are going to look for that. And then the next lesson, we are going to combine everything. How you look for trade, how you look for direction, okay? Direction, wait for rejection, and then entry. We are going to do all those things, okay? So now within this is a trend line. If I'm lucky, the trend line will be there. If I'm not lucky, the trend line will not be there. But what is my confirmation that this Quasimodo level is going to get is the engulfing on a higher time frame. Opposite, if I get a base, if I don't get a base and I get an engulfing, I can still take the trade. I hope your question has been answered.
Yes, thank you.
All right. Any other question?
Okay, sir. When you say opposite, that should be the impulse move.
Yes. Yeah, it should be on the impulse, opposite. Okay, it cannot be here, opposite at the other side. Sometimes, if you find it here, it counts. If you find it at the left-hand side, it counts. But the best is to find it at the right-hand side, the open one. Okay.
Okay.
Any other? Okay, no further question. John.
Lex.
Yeah.
Yeah. It's possible that, let's say, for instance, on 1 hour time frame, we have a Quasimodo there, but on the pullback, that is going to be the final trade into the Quasimodo level. We can also go lower to find a Quasimodo level into a Quasimodo level to trade it.
Yeah. So as I was saying, you see, the patterns we've learned, they are like patterns or setup. The setup we learned, they apply to every time frame. So you can see a Quasimodo within a Quasimodo. So for instance, if I have, okay, this pattern, and I have a QM, okay, at this level, interestingly, okay, at this level, I have a base. Let's say we have a base. Okay, so let's say we have a drop, a base, and a drop. Okay, this base drop that you are seeing here can be any pattern. Within this drop base drop, you can find a Quasimodo there. So it will be high, low, higher, high, and lower, low, and you can mark it. Okay, this drop base drop, okay, can be an SNRC one, because maybe before we broke the base, we left what? Before we broke the low, or after breaking the low, we left what? A base before breaking. Okay, you see what it has formed, right? So it can be anything. So you can find, so for instance, let's say the correction, I now understand your question. Let's say we are correcting towards a Quasimodo, right?
Yes.
We are correcting towards a Quasimodo. You don't want to take this because it's a higher time frame, so you don't want to put limit orders. Okay, price enters. When price enters, you will see this. This is something I was going to teach you later. You see this kind of candle. Okay, a candle, maybe a bullish or bearish candle. Okay, that closed below the level. Hold on. Okay, closed below the level. So price traded in it like it. Traded in it like it, but it didn't close within the level, the base. It closed outside the base. So this rejection itself, okay, whether it is a bullish candle or bearish candle, tells you that there has been some kind of break in market structure. So with your pullback, okay, so this should be looking like this. All right, so something like this. Then you can mark this Quasimodo, okay, on the lower time frame. Okay, and mark this Quasimodo on the lower time frame, and then sell from there. Okay, right. Now, interestingly, it may not be Quasimodo. Okay, you know, maybe you had missed this particular Quasimodo. Let's say you missed this Quasimodo. Okay, but price gave you something. Let's say you came down like this, right? Got in and broke this. What do you have? What pattern do you have? SNRC2. Okay, SNRC2 here, like on gold. See the gold setup. I missed the entry. Where is it? This one, I missed the entry. I couldn't set here, right? There was no Quasimodo here, but there was SNRC2 here. So that's what I'm drawing. Okay, where am I doing the thing? Okay, here. So that's what I'm drawing. So it means that when price reject the level, it applies when the level is on a higher time frame. But if I see SNRC1 on 1 minute, I don't complete for rejection because the risk is going to be small. Any other question?
Okay, so for the QM level, where do we actually have it? Is it on the leg that started the rally or at the place we have the BMS?
Where do you mark it? Is that what you're asking?
Yeah, where do you mark it?
Yes, you mark the left shoulder.
Is it the place we have the BMS? From which point?
You mark it from here, from the close of the candle to the wick. Okay, from the close to the candle to the wick. Which Quasimodo example did I give right now? Okay, I think gold 1 hour. You see here, okay, you have a high, a low, a higher high, and a lower low. See the way I marked it. You see the close of the last candle to the wick back here. Can you see it?
Okay. Okay.
Okay. So I hope you get it.
All right.
Yes. So this is
it's not the place we have the break of market structure.
Yes, the break of market structure happened here. In this case, we have the first break, the break of market structure high low happened here. Okay. Now see something.
Yes.
Here today was a Quasimodo, low, high, right? This is another high. So this is another Quasimodo here. Can you see that? It has been used.
Okay.
High, low, higher high, lower low. See, when it broke the low, it came to use it before going. So this break of market structure here, this BMS here applies to what? This trend, not this entire trend, but this BMS here applies to the bigger trend. Okay, so when we have a BMS, the high that was broken, okay, the left shoulder, we call the left shoulder, you mark it from the close of the candle, okay, to the wick. Now, you see, at the end of the day, when you mark, okay, this is not the level you are trading. You are trading what is opposite it. So instantly, your base becomes your entry. This base becomes what? Your entry, and your stop loss is supposed to be here. I hope you understand.
Okay.
All right.
Yes.
So we bring the meeting to an end. Any other question?
Felix.
Yeah.
Lex.
Yeah.
Can you go over the SNRC2 just briefly?
You are
Felix, before you go
YouTube. So go to the YouTube video. The SNRC2 is on YouTube. Okay. The time is up. Time is up. Caution. Is that question? Caution.
Yeah.
Caution. I be me that you do the SNRC2, sir.
Oh no.
Okay. I'll have a one-on-one with you. Okay.
Okay.
All right.
Okay, Felix.
Yeah.
Before you go, you know the my little problem with SNRC2 and 1. You know, after every liquidity grab,
who is talking?
The Angel.
Oh, Angel. Okay.
Yeah. The base that will be formed will become a point of liquidity. So most of the time, what confuses is me when the price breaks the support or resistance level before it form
So let me follow
a
you.
base.
For instance, we have
Okay.
here, okay, it breaks the support and resistance here before it forms a base, like this.
Yeah.
Okay.
Yeah. Uh-huh.
Okay. So now your point of interest is the base. I know your question. Your question is that where is your stop loss? Huh?
Uh-huh. 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 Uh-huh.
Something like this. Okay. So we know this is liquidity.
Yeah.
Right. Okay. All right.
Yeah.
Now, you see, in this particular circumstance, right, this can be liquidity and may not be liquidity, right? So the point is this. Normally, this is a low resistance liquidity as we've defined it, okay? But because it's close to what? A strong support, you can take this as a trade. But the point is that sometimes price will trade slightly above it. It happens plenty times. Okay,
Most of the
but with
time.
SNRC2, you don't have that problem to trade slightly above it and then drop. Okay, so if you are using the base,
Okay.
where is your stop loss? And that is the problem with what SNRC1. So usually with the SNRC1, if it's a smaller time frame, okay, you can look for maybe some 2 pips above this one and put but it's not supposed to be right above. Like, give it space. But if it's a higher time frame, okay, the reason why I missed this BTC is this. Okay, with this SNRC1, I didn't know where to put my stop loss. Okay, I could have, you see that I didn't use that as liquidity.
Yeah.
And it's a higher time frame. So if I enter anywhere around this place, now I have to put my stop loss somewhere below here. Okay, so what I did was that I waited for price to break the momentum trend line. That's what I was waiting for. So I was looking at it on the 15 minutes chart to just break the momentum trend line and I can enter. Okay, but when he did that, I wasn't there. Okay.
So you missed this trade too.
Yes, I missed this trade. I missed. Okay. Okay. So when it broke the momentum trend line, I wasn't there. Okay. Meanwhile,
So you think price will come down to the QM?
To the QM, yes, but it is going to be pushed by a higher time frame point of interest. Okay. So unless we hit here, if we hit here and we break structure, then we come back to the QM. Okay. But you know that basically on the higher time frame, you're on a downtrend. Okay. So with this particular strategy, you don't, the trend matters, okay, but it doesn't matter like that because watch, SNRC1 is just a trend continuation. The meeting will end right now. This, okay, means that you have broken structure. Okay, we have broken structure. And just that you cannot come in here, you cannot come deep in here, right? Because we have something at the top here that is preventing price. That's all. If you have nothing there, it will come deep here. Okay, so within this, we can have the Quasimodo. Okay, so already when you have this pattern, it tells you that you know the direction already. Okay, we have broken the high. So this is a pullback and then we buy. Okay, so let's say we've broken the high here. Okay, there's something at the top here that is preventing price. So price will not come back inside. We'll continue going up like this. Right? If you draw a trend line and there's an engulfing, okay, price can do this. It can hit this one, still continue up, but still we try to come here and then go back to the top. Okay, so I'll end this session here. End the session here. Okay, so if you are still interested in joining the academy, we do a lot of things there. And for now, I'm on break from school, so more activities will be going on in the academy, and I'm saying that I had wanted to make it free. See, I opened, I said I put it on a certain page that you should see me and then you join the academy. But people didn't join. But yes, my colleague has spoken to me that no, you can't make it free, right? Okay, so if you see me and you talk well, I can sign you to the academy. Okay. All right. Thank you very much, guys. Bye-bye.
Thank you.
You're welcome. Bye.